All right. Well, that was good timing. All right. Hello. What I wanted to bring to your attention real quick is something, again, we were bullish last week in the market. We talked about SPXL. Anyway, J Person Asset Management, you guys know, if it wasn't for the other day, I mentioned we had taken a long position. We're flat right now. So even for the fund, we took advantage of this upside. The system, though, in the algo room is still short of VXX, still long SPY and SPXL. Stops will be overridden. We have a different model we have that we use for the fund, and that, excuse me, had gotten flat. So let me point out, while the advanced decline is very strong and we had good upside momentum, and we were talking about this SPY getting to around 203 on a move last week, or excuse me, 203, listen to me, 302, 302. I know my handles. 302. What I wanted to point out is this pattern here in the VIX. This is the VXX. I said earlier this morning, it's ironic, we really didn't take out the lows much in the SPY or the highs out in the VXX while we've been testing the highs in the SPY. But one thing I'm not a fan of, if volatility traders really believe that this market's got more legs, this is our proprietary volume indicator, and this is just a regular OBV with a moving average setting. As you can see, we did make a kind of quasi newer low in the market from this spot to that spot. So if this is number one and that's number two, correspondingly, number one and number two, number one and number two, and I sound like an optometrist taking an eye exam. So if the number two spot made newer lows in price, why did the condition not follow it? If we're going to see a market go down, then what we want to really see and stay down, we want to see corresponding volume stay down. When it doesn't, it tells me that something is weird. So if we get this market going down and there's no volume to accommodate, you generally get a spike. Now, I don't know how long it'll stay spiky, but I'm just trying to point out that right now we don't have a strong commitment in volume. It's a stronger divergence from the May 11th area to current. It's a strong convergence pattern on the VXX. All right, so let me put on pause, and I'm going to show you a different. All right, that should be back in order. Double check me. Oh, boy. All right, this everyone should be seeing this chart now in front of me. This is a different spider model. You guys don't use, we don't use this in the live trading room, but it's something very close. It currently has about the same. You'll notice the different size of position here versus, that's the same position. But I mean, it took a PPS buy signal, so it's going to be pretty similar. You'll notice that we've had consecutive series of higher highs. And even Friday before we left, I said, guys, this is, you know, it's kind of scary. So I don't know about being real heavy long, but very scary what's happening. The higher we go, the progressive higher movement we're getting, the weaker the volume is. And I'm not a big fan of that. The only positive thing I can say about the market is that we got strong advanced decline, but we know that can change in a heartbeat. Over time, my volume indicator is also illustrating a very significant, scary divergence pattern. So VIX traders aren't seeing a lot of real love out of the market right now, and that's why there's no one really committed to the short side of the VIX. And that's why we're flat in the market as well for J Person Asset Management. Am I short? No, because I still, you know, we could get volume coming in later in the day. This model's still long. And while models are long, I don't like to fight the tape and be short. But I do like to take a profit on a higher gap open in the market because it's just kind of a sucker's play. And without strong volume commitment of institutions or anyone coming in the market, not a fan. Also, remember this morning we went over the commitment of traders data, which shows small speculators super duper long. Listen, they're not rocket scientists. And in my 40 years of doing this, that is one thing that I got to say. Over time, the small speculators get lucky every once in a while. You know, every broken clock's right twice a day. But on overall timing of the event, they're really too long in the market. So you can go back and you can look at the COT data on our website. We already discussed that in the live trading room. So I think best, we don't have a sell short signal, but we have a market condition that suggests this rally's in jeopardy here. So while I can't really say buy a put, I can't really say be long. And so therefore I'd say maybe cash. Sometimes what happens is that we get a delayed reaction in volume trend, might take 2 or 3 days, and then we see what really this thing's made up of. But without a sell signal in the market, I can't sell short. There's just not a chance in hell. I would say we need to get aggressively long now. Profits, yes. Aggressively long, no. So I wanted to share with you the VXX. I wanted to share with you the SPY. And now I want to share you one more. In times where traders, institutional or hedge funds are very bullish the market, rather than go with SPY, they'll go into a leveraged ETF. And if you're bullish, you go with, SPXL. It's a highly liquid marketplace. SPXL, ironically, volume, high, equal high, higher high, higher high, higher high, and nada, zero, zipola. This is another divergence right here, which shares with me that not many people are too convinced this market has more legs. Now, the system been long over here. It's got a tight stop there, but that's the profit target, the blue line, which we came darn close to. So the bottom line is this market has gotten in some really good trades, as you can see, out on compression. Nice trade here. This goes all the way back since just April. Another nice trade out on compression there, out on compression there. It's not out yet, but my guess is you hit that orange line and it's hitting the silks. With this type of volume action, though, it makes me say override system, LMO RFN, which is my famous acronym for let me out right frickin' now. That's kind of avoiding the whole system trading plan. But let me tell you something. The conditions of this rally on light volume, it doesn't make me feel warm and fuzzy. If I could see follow through weakness in the VXX, if the VXX made a new low on the day, I'd say, hey, guys, you got to stay long. But when the volatility traders don't have a lot of confidence to be in the market, why the hell should we? So with that said, we might get a little, maybe a reprieve, a 1 to 2 day pullback in the market, which maybe is what we need. Fill that gap, maybe a little bit more, I'm not sure. Maybe come down and fill this gap. I don't know. But right now, I'm just pointing out the obvious. Small specs long, no volume rally leads me to say we had a nice little run. And who's to say we won't see this stair-step type grind trading range, which was like, well, something I called for about, a month ago to begin with. So at this point in time, I'd have to say longs, directional longs. We called for a 302 print in SPY last week. We got it. That was an objective. And if we start to see late in the afternoon and we got another hour and 6 minutes of sell-off, then my guess is we come back down and fill that gap and then really see what this thing's made up of. Sorry to be the party pooper, but we did pretty well in the trades. A lot of our stuff is okay. Fizz is okay. We got a little pop out of Walgreen Boots Alliance out of the, as you can see, that swing high. We need a daily close finally over this line in the sand, and that really would be an add-on for any longs there. Until everything else has started to kind of like dribble off a little bit. And the biggest dribble of all has to be this guy right there, the Nasdaq. So let's take a look at the Nasdaq and compare futures and cash ETFs. So we've had our lines in the sand. We've looked for breakouts. We've done a great job. We've called for support down to this level. Buys. I mean, really, we've been kind of Johnny on the spot in this market. So let me go over and just share with you this. When I see a rally in the market and you have a new high and it looks great and there's no volume, where it's like, you want to start saying, where's the beef? Where's the volume? Where's the meat and potatoes in this rally? And it kind of left us on today's higher gap open. All right, fine. That's the futures. Maybe because of Memorial Day holiday. I get that. So let's take a look at the cash market and convert to the Qs. So, whoa. That's about the scariest bullish divergence pattern I've ever seen. Newer highs, triple, 3 times the charm. Newer highs. Look at the red candle, rejection, rejection, rejection. It just doesn't want to stay above that high very long. And look at the volume levels. Are you kidding me? So the problem is I don't have a sell signal unless we get a close under the pivot, that's when you can look for a pullback probably into this zone. The volume here needs to break down. So longs were the right call. Right now, flat is the better call. If you close less than the person's pivot fuchsia, close less than that, and we take out this. It's an if-then. I'm sure everyone's smart enough to follow if-then, because it's if the market closes here and if the volume breaks the low, then you have a volume price breakdown, and that's what you can count on for a higher probability sell signal. I hope you enjoyed that. This is what I would say that the market right now is warning us. We have a massive volume divergence, not just in the SPUs, not just the SPXL, SPUs or SPY, not just the VIX, but right now, an hour into the close, I'm just not feeling the love. Only caveat is the advanced decline is super duper strong. So we need to see if there's volume coming to the close. But if we break down, baby, this ain't a trustworthy rally up here. Thanks for listening. And I hope that helped you out, at least to share with you what I'm looking at and why. More importantly, why I'm more of a system trader rather than betting with my head or betting with my heart. Because Lord knows this market is, man, full of, I mean, I don't know if we ever get the real story on the news anymore. But opinions, yes. The real news, I don't know. Thanks for listening, everyone.